Hi, my name is Shane Handy. I am the founder of The Rational Trader. This is a video in a continuing series on trading the markets using visual order flow. We're going to talk today about the dynamics at the turn and the pullback and how I read the market using visual order flow in those cases. There's a particular emphasis on when is the pullback over and is it safe now to get in? Is the market continuing in the direction it was going? So we're going to take a look at that in some detail. Before we get started, there is a discussion we need to have about risk. Trading is risky. It's risky because of the inherent difficulty in trying to predict the future, which is what we're doing as traders. I actually believe the risk is higher than that or greater than that because people don't understand the source of the risk. Everyone looks at the market as a technical puzzle or an intellectual puzzle that needs to be solved, and thinks that if they just find the right technical approach, they'll be successful. And while it is a necessary skill to be able to read the charts, it is not the only skill. And in fact, what I see where people get tripped up the most is not recognizing that when they put money at risk, they have a very natural physiological response to that risk. That's a threat that your body perceives and responds, and that's why you're feeling fear of pulling the trigger and giving up, missing out, fear of missing out, a lot of anxiety, doubt about what you should do. Excitement, greed, and euphoria are on the other end when things are going your way, or you're seeing something happen, you get excited about it, and all of these things affect your ability to make a good decision and are actually, in my opinion, a greater risk to your account than whatever technical approach you're using. The Rational Trader is actually designed to help you understand that and how to overcome it. I also look at the market in a different way because I'm specifically trying to find those cases where people are acting out of fear or excitement. All right, so with that in mind, let's switch to the charts. We're looking at the NASDAQ here. This is Friday. We're gonna review the action on Friday, not September 29th, 2017. This is a 10-tick range bar chart, and it's the Pacific time zone, so it's the times you see across the bottom. There are some vertical lines that represent key times, like news events at 5:30 in the morning and the NASDAQ open at 6:30. There's some horizontal lines that represent key levels. All these I have the software draw for me automatically. The software is Sierra Chart, or AT charts if you're getting it through Infinity. You've got the overnight low, glow low, the previous high. These are these white lines. Then also this purple line over here is yesterday's close, the open, today's open. Some useful to have as the market approaches those levels. It helps you recognize where there's obvious support and resistance. Now we're going to look at the momentum signals in particular. If you don't know what these are, then I'm going to give you the short version here in a minute. But if you want more detail, there is an introduction to wave volume and introduction to order flow video on Infinity's educational site as well as on the Rational Trader site. You can go watch those and get a lot more detail about what these signals mean and how they're calculated. We're specifically looking at momentum. This is the bright green and bright red outlines. Bright green is momentum long. It means we're seeing aggressive buying, lots of trades going off at the ask. And then momentum short is bright red outlines. We're seeing lots of trades going off at the bid. Okay, so there's aggressive selling. And then the blue and pink bars are order flow view of strength. So I see lots of buying in the blue bars, and I see lots of selling in the pink bars. Okay, and then across the bottom are the volume and the waves, and we will use that when we're looking at wave volume to help us understand direction. So, with that in mind, let's take a look at what we see here. This is the NASDAQ. It opens up. That gray background is the first 5 minutes. That's a blackout period for me. I won't take any trades during these high volatile times. And what we see is the market's been in a nice uptrend, and as the market opens up, it pops higher. All right, so now at this point, it starts to falter. There's two down bars, and let's see, an up bar and a down bar. So the question here is, who is selling up here? And the way I view this, my read on what's happening, is that the people that are selling up here are the ones that got in earlier. So the folks that are selling up here are the ones that got in earlier, and they're taking profit. So they're exiting the market, and this is a key to understand. These are not people that are selling because they're opening new positions. They're closing out positions. Okay. Now there are other people involved up here as well, though. So if you think about it for a moment, if I got in earlier and now I'm selling up here, who am I selling to? Someone's buying from me. So if you think about it, I think that buying up here is really not that great an idea. I think you're chasing. All right, that's my default view would be you're chasing the market. The entry was earlier, and now would be a time to be taking profit. So you have people that are buying up here, and what's going to happen is, as the market fails to go higher for them, they're going to start getting stopped out, and this is what we see here. This is true, I believe, for every single pullback that you see. The market makes a move, and then profit taking starts, and that move starts to falter. So for a long, the market's going up, profit taking starts, and the market pulls back now. People that chased it start to get stopped out, and that drives the market lower. And so you actually see momentum short here at this point. The market's pulling back, and really what we're looking for now is, once all the profit taking is finished, and once the foolish chasers are all stopped out, what happens next? If the market's going to continue higher, if I want to evaluate this point in time as a pullback, what has to happen? And the answer is you need new buyers. New buyers need to step in order for the market to continue higher. It's very simple, actually, what needs to happen. Seeing it can be tricky, but when you reduce it down to the basics, you need new buyers to drive the market higher, and you need new sellers to drive it lower. People that are in the market are no longer a factor, really, except as they exit and take profit and cause the flow of the ebbs and flows of the market. So now, that means if I want to see if the market's going up, I have to see momentum long. All right. And so what do we get? Momentum long. Oh yes, let's get in. Actually, no. Because while you see bright green outlines, this is momentum long, aggressive buying, new buyers stepping in, the price is closing down. This bar here is closing down, and that's a problem. What we need to see is price confirming what the momentum says. If you have momentum long, but the price is closing down, that means that you have sellers that are absorbing all of that buying. Momentum long means there's aggressive buying at the ask. But if the price is closing down, that not only is there enough sellers absorbing all of that buying, there's even more bringing the price down. Okay, so not safe to get in long yet. What happens next? Okay, momentum went neutral. There's no outline at all around this bar. This is exactly what I want to see, in fact. All right, and we'll see that several times throughout today's discussion. Ignore for a moment the fact that bar is pink. Pink means there's big selling, so that's would be further a reason to be cautious about getting long here. Many people would go, it hasn't pulled back enough. Okay, I agree. But it doesn't matter. I can use the order flow to help me understand when the market's pulled back enough or not. Okay, so we're not applying math here that just says, well, the market's pulled back 38%, now it's time to get in. That's not what we're doing. Instead, we're actually looking at, well, what are people doing? And using their behavior to make a decision on what to do. All right, so at this point, I've pulled back. The profit taking has happened. The people that chased it got stopped out. The market tried to go higher. We see buyers stepping in here, but price is closing down. We go neutral, and this is exactly what I want, because at this point, the next momentum bar, the next bar with momentum on it that is closing in the direction of that momentum is my direction. That's what I think. Okay. And so what do we get? Momentum short. That looks pretty good, except it's closing up. Okay, so if that bar was closing down, I would go, well, the market's not, this is not a pullback at all. I need to be getting short. What happens next? Bright red closing down. This is a short signal. Okay, so not only is there not a pullback entry here, the market's actually turning. Now, this is a very advanced read to see the turn. In a little while, I'll show you a much simpler one. The basic turn that we use wave volume for when it sets up for us. Here it didn't. So instead we have to go, all right, well, I can see the short here because I'm reading the order flow. More importantly, perhaps, is I don't have an indication that I should get in on a pullback long. So you could still, you could be absolutely not interested in shorting here, and that would be fine. You're looking for the pullback long. There's no interest. There's no indication here that you have new buyers stepping in and price is confirming. Okay, let's see what happens next. More selling, momentum short closing down and breaking down even further now. So it's okay at this point. You know, the market's pulled up nicely. This is the open, a normal place for the market to find support. Let's evaluate this as a pullback point for a long. What do we need to see? We need to see the new buyer stepping in, right? Which is momentum long. There's an up bar. The yellow on it I'll explain in just a moment. Another up bar. Okay, it's starting to look interesting. And what do we get next? Okay, still bright red closing down. Neutral. Okay, so this is key. You're neutral now. What happens next is important here. Bright green closing up is, okay, that's a clear pullback long, I think. Bright red closing down, that's a problem. That's short. Throwing a monkey wrench into this mix is this yellow bar. This yellow bar is failure to push long off the wave volume signal. So if I was interested in shorting, I'm going to be careful now. And if I'm interested in getting long, okay, this says, okay, yeah, I'm pulling back here. Failure to push means that we got within one bar height of the low on nice volume, but did not break through. Okay, so there's an expectation that if you have a lot of down volume that you're going to break that low, and we didn't. Okay, so what happens next? Ignore the triangle for the moment. We're still neutral, neutral, neutral. Where are the buyers, people? Still no buyers, and short. That's a short signal. There's two short signals there, actually. The one we've been evaluating, but also you now have no interest short, which is looking at this wave here, and saying, where are the buyers? There's a massive decrease in buyers here, and as a result, you need to get short. So the pullback evaluation is don't do it. Don't get in. So there's a lot of people here that were buying pullbacks here, 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 here. Only this last one probably scratched. Everyone else is taking losses. All right, except if you're looking at it sort of this way, what you're doing is avoiding that loss. Okay. Now let's continue here and see what happens next. The short here is actually hard to catch because the market just falls apart. All right. No interest short would be on the break. So I need, if there's big buying, if there's a pink bar right there, that's an immediate entry. The alternative is let's set the breakout study here. You can get more information on this particular entry in the other videos I mentioned earlier. The next bar gives you the signal. It's too late. The market's just falling apart here. Any entry here is chasing. It may or may not work out, but the way I view the market, I want a good entry. I don't want to chase the market. All right. As it happens, I believe it would have worked out. The market's going to continue to fall here. Let's stop right here and look at it now. We made a nice move down. I think you could argue that the uptrend is over, and now I want to evaluate this as either a turn long here or the pullback to get short. Okay, seems reasonable. Let's clear that off here. All right, so the reason that I stopped right here is that's a 3-bar reversal. So you get 3 up bars in a row. It's time to stop and take stock. Is the market turning or not? You actually happen to be right at the overnight low, so that's reasonable. That's a place that there's a lot of eyes looking there. Let's see what happens. Remember now, who is causing this buying? This buying right here. This buying is the people that are buying to cover their shorts, their profit taking. Okay. You also have people that were selling down here. Think about the people that sold down here, especially the ones that sold in this bottom bar. Okay, they really are chasing the market. It's really, to me, it's silly to be selling down here. It's a full 36, 46, 16 points off the last swing. All right, seems pretty late to me to be getting in. And those people are going to get stopped out as the market pops up. All right, and so eventually, when all that runs out, what's next? So we go neutral here. Okay. What happens next? Bright green. Maybe the market's going up now. All right. More likely to me, this is a continuation of the closure of the move. So people buying, people covering, other people getting stopped out. But the important point here is that we're seeing bright greens now. All right. And there's a theme here that's going to come up here. The next bar is neutral. To me, whatever the next bar that is momentum, that's price closing in the direction of that momentum, is the way to go. I need to see sellers stepping in, closing down, or buyers stepping in, closing up for the turn. A complicated turn, right? There's not a wave volume turn signal here at the moment. Bright green closing up with big buying, no less. Okay, so this suggests to me that the market's turning, and it would be time to get in long. All right, certainly I wouldn't want to be shorting a pullback, not yet. All right, if I'm evaluating this as a short, this is a normal place to do it, right? You pulled back to the midline of that Keltner channel, but there's no indication that there are sellers stepping in. And okay, so the market pops higher here. A tough turn to catch, but if you're reading the order flow, and particularly if you have an external reason to think that this overnight low or previous close level is important in a place the market's going to turn, your entry is clearly right there. Okay, bright green closing up. After you see the market, the buyers try to step in here, all right, and then go neutral. So there's a theme here. After the move, what you want to see is both colors and then neutral. It doesn't always set up for us, but if you go back and you look at the turn up here, we're pulling back. We're pulling back here. I see reds. I expect to see that. I see greens, momentum long. I go neutral. The next color that's closing in the direction of the color. Short here. Okay. Here, the market's falling. I'm pulling back. Here are my greens, reds, greens, neutral, bright green closing up. I think this is a fairly aggressive long, frankly. I'd like to see the market test this level. And if that happens, I'll get a very clean wave volume signal. It doesn't, though, in this case, and it doesn't always do that. So if it's not going to do that, this is a way to read that. This is a very reasonable entry here long. But let's continue to evaluate this as a pullback. All right, the market went down nicely. You're pulling back to the open. This would be a normal place for the sellers to step in, the shorts to step in and stop the market and take it lower. Some faltering, still going up. Okay, a couple down bars at the open and the overnight high. What do we expect to see here? The market's moved nicely from 33 to 50-ish. we're going to see profit taking now. All right. Bright red's closing down. It's not time to short here on the pullback. You've had a big move here. All right. In fact, that move equals that one basically. I'd say, and so it's difficult to say, oh yeah, this is a pullback, because kind of a normal pullback you sort of expect to come back about that much and then roll over. Instead, these waves are so big, they're basically equal. I would argue that there's no direction in the market right now because of that. Look at the wave volumes. There's very respectable volume here. Okay. So I would look at this as like, well, I've got a nice big wave. There's no reason for me to try to short it here on a pullback when what I really want is a test. Give me a test of this level. And if you fail to go, I'll get a wave volume signal and short the market. That's pretty easy. I can also consider this. This is the new direction. And I can look at this as a pullback to get long. So let's evaluate both. Is this the top, or is this a pullback to get long? We are profit taking off the longs. So the selling here is the people profiting, closing out that got long earlier. And then you got people that bought up here, and they're getting stopped, and that's what this is. Couple of up bars. Ignore the purple triangle for the moment, because you don't get that signal until the next bar, okay, in real time. Bright greens. Okay, so now the one way to evaluate this is that the profit taking and the chasers getting stopped out is done, and now this is the first attempt by the buyers to step in and take the market higher, and it's failing because the sellers are absorbing it all. Okay. We'd like it to go neutral. If it goes neutral, it makes it really easy to figure out what to do next. Neutral, exactly what I want to see. The next color closing in the direction is the one I want, is the direction I want to go. All right, so bright red's closing down would be my short. Bright green's closing up would be the long. Okay, that's the long. Now, this long I don't like, and there's a very clear reason. Because, hang on, let me get rid of all this. Because this resistance point is right there. All right, so one thing that will really help you is that don't take an entry where you're just in front of support or resistance. Okay, you need to be at scratch before you get to support or resistance. Otherwise, just wait. Let the market pull back. Let the test of that support or resistance happen and see what happens. You can save yourself a lot of grief by evaluating where is that entry. Okay, so I would stand aside here. I also have a wave volume signal in the no interest here. So this no interest long signal is based on the fact that we're the sellers. The amount of volume in that wave is substantially less than the previous one. There's certainly respectable up volume. And so I'm now looking long, not short, because of this signal. Okay. And with that signal, I've got very specific entry methods I can use. One of them is to pull back and then rotate bright green, and I'll get in there. The other is to break out. Okay, so let's set the breakout here, and we'll evaluate the order flow on the breakout. Let's see what we get. What we get is that's the bar that's closing above. The pink dot is saying, okay, this is the bar I'm going to use to evaluate subsequent bars. We want to see more buying in subsequent bars, and we actually never do, so there's no entry there. We also get, when this bar finishes drawing, we get that no interest short signal. All right, so now things look a little bit different. Let's see. It kind of looks like you're rotating around the open. All right, and the earlier statement that, well, maybe there's no real direction in the market is looking fairly accurate. The reason that's important is in order for you to enter on a pullback, there has to be a direction. If there's no direction, then there's no pullback entry, period. All right, then you're either looking for a turn or a break. All right, and what I do is I just default to, all right, if I can't figure out direction or there's no obvious direction, then give me a wave volume signal, and I'll go in that direction. Okay. So this is currently saying short, but then we get long here, and then you break through on big buying. That's a long signal right there. The normal entry is right there. Okay, so let me clear all this. the normal, at this point, the no interest short long signal there. You've got a level set up here, okay? And so the way the breakout works is we want to see strength on the break. And that's either means the break bar itself, we see strength, and that's what that blue means. The blue means I see 50% more buying in this bar than the average of the previous 10. Or if I don't have strength on the break, I want to see subsequent bars that show more buying than the break bar. In this case, very clear signal to get in on that break off the wave volume signal. So that entry is there. Let's see. So you will get filled. You're going to have to be quick. You're paying attention. All right. The market's going to pop higher here. Now, what about here? We broke through this resistance on some big buying, and then we pulled back. Let's evaluate this pullback here. We see momentum long. As we break through, you expect to see that. It's actually a little odd to see it go neutral so quick like that. That's interesting. Still some momentum. And then you see the momentum short. Now, this is exactly what you expect to see on the pullback, right? This is the people that are covering, and then the people that chased getting stopped out. And that's the selling that's building up here that culminates in that momentum short signal right there, or momentum short bar, I should say. It's closing up, so that's okay. There's still buyers floating around. And then you get a rotation to greens. So if you remember what I said earlier, show me both colors and then go neutral. Okay, and then it becomes easy to see who is stepping in now. All right, so the neutral bar is right there. And I'm evaluating this as a pullback. I broke through the high on respectable volume, on strength here, on these bars. If it's a turn, I will see the test of this level fail. Okay, or we've pulled back to here. I see buyers and sellers. Okay, now I've gone neutral. Same story as earlier. Whoever steps in is the direction the market's going to go now, the way I read this. Bright red closing down is a short, bright green closing up is a long. This is a fairly standard pullback, though it does go sideways for a bit. Bright red closing down, closing up, that's not what we need. We need bright red closing down to short this, or bright green closing up to get long. Neutral. Neutral still. There's your long signal. Bright green closing up. Okay. Actually, it pops higher really nicely there. Okay, so this is a way to look at the actual behavior of the traders at the turn and at the pullback to see what they're doing and see them stepping in one direction or the other, and then using that to help you make a decision on what to do. I'm going to very quickly show you a more basic turn signal. These were actually fairly advanced turns here. This one up here and this one down here. This is I would not expect someone new to the rational trader to be able to read those turns well. Okay, that takes a little time to see that. But the wave volume makes it really easy. So let me pause real quick and go back to Wednesday, and I'll show you that. All right, here's Wednesday, the 27th. NASDAQ open. You get a no interest long signal there during the open. You can evaluate that as a pullback given this, all right, but you don't need to because you've got wave volume. Nonetheless, if you just look at what you see here, this pullback is so weak you don't even see momentum short. It goes to bright green, closing down. It goes neutral. Next color closing in the direction of the momentum is right there. Now, you actually don't even need to evaluate it like that because with the wave volume signal, you can just evaluate it as a break, and it very clearly you see strength right there on the break. So that's the long. But what about up here? You know, we're pulling back, we're pulling back, we're pulling back. There's my bright reds, right? People taking profit, people getting stopped out, attempt to go higher, bright green closing down. That's not what I want to see. But I want to see greens anyway. Now I want to go neutral. But what ends up happening is I get a no interest short signal. That makes it easy. It's not. You don't really even need to concern yourself with the intricacies of the individual bar order flow when you've got a no interest short signal. That signal says, look, where are all the buyers? The buyers are just absent here. And so we can just evaluate that as a break and find an entry. Sometimes it's going to give us an entry, sometimes it's not. Here, the normal entry is one tick above this bar that's with the pink arrow pointing down. Okay, so we break through. We're looking for more buying or more selling. We don't see it on this bar, but finally we see it here. That's the pink arrow. Standard entry is one tick above the high of that bar. That's called a vacuum pop entry short. And then it thrashes around a bit here before it finally rolls over. So anyway, the point here was I got a little excited about the way that worked. But the point here is that that's a much cleaner looking turn. It's much easier to see that turn as opposed to the much more nuanced view we had to employ to see the turn short, that first turn short on Friday and the second turn long on a little bit later on. All right, that's it for today. Again, if you want some more details on the algorithms that are involved in calculating momentum, strength, and the wave volume signals, then look elsewhere on Infinity's educational site has the 5-part series that describes those signals. You can also see it on the Rational Trader site. In general, kind of the message here is, if you think about a lot of the traditional methods for trading, they use things like stochastics and oscillators and moving averages. And what these are mathematical models applied to human behavior. And in that respect, they're very abstract. They don't feel abstract because you put them on the screen and they look very concrete. Look, the moving averages are crossing, and when the price is pulling back to the moving average, they look concrete, but they're not. They are an approximation, a mathematical approximation of something that's very unpredictable, human behavior. What I'm doing with visual order flow, or rather what order flow gives to us, is the ability to actually see that behavior. We don't need to approximate it. We can see it. All right, and it becomes a question of how clearly can we sort of untangle the random variation, sort of the chaos of thousands of people trading at the same time to create a picture of what we think is going to happen next. All right, so that's what the trade setups that I use are built around. Finding those cases where we can see that there's a higher probability of one thing happening over another. So you heard me say, show me both colors and then go neutral. And the reason is because once you go neutral, I very clearly can see, okay, here's a new buyer stepping in, or here's a new seller stepping in. If it doesn't go neutral, you can't see that so easily because the signal hasn't changed for you. Okay. All right. So that is it for today. I hope you found this enlightening, or at least given you a different way to think about trading the markets. Take care.